my name is James Nicholson. Welcome to my YouTube channel. I've got a lender that will lend you 98.5% of the money that you might want to use to buy your first property. Now, this could be a cracking deal for first-time buyers, but you can't go in it not understanding all of the complications that could be there in this kind of deal. So in this video, I'm going to unpack who this lender is, what are the pros, what are the cons, should you go for this, should you not, and would I go for this, or would I allow my daughters to go for this type of property deal? This is something that the government are pushing at the moment. The government are pushing lenders to lend more money. That's their goal at the moment. So they've gone to the Financial Conduct Authority and said, relax the rules. Take off some of the rules. Let people borrow more money. Allow them to have smaller deposits. Let them borrow more times their salary because we want to get the property market moving. Well, they don't say that. What they say is that we want everybody to have the opportunity to get a house. So this stuff is going to get the market moving again because it's stagnant at the moment. You're going to see more lenders doing stuff like this. So if you're new around here, before we jump into this, do make sure you subscribe to the channel over there and hit the bell notification. Every day we've got new property content. We talk house prices, we talk interest rates, we talk investing in property and much, much more. And I think people need to know about this deal because this isn't in all the mainstream media. So how can we get more people aware? Simple. Smash like, tick or like, do something to that like button. That helps with the YouTube algorithm. And then if you know someone looking for a house, click that share button down there and then share it to them, WhatsApp it, Facebook, or email it to them. That'll help. So this is with a lender. I never heard of this lender, if I'm totally honest. There's thousands of lenders in the UK. I haven't heard of all of them, and you probably haven't either. But this is a company called Newcastle Building Society. Obviously, based in Newcastle. Now, what you do see is that you get lenders like this that you've never heard of, and then suddenly they're everywhere. There was one called April Mortgages. I'd never heard of them. And now they're doing lots of competitive deals to get market share. So maybe this is the start of something from Newcastle Building Society. Let me know below if you've even heard of these guys before. But they're going to lend first-time buyers up to £350,000, which isn't bad. Especially if you're near Newcastle, then you could find something quite nice for that. And even in the south, even in Surrey, you could find something nice for that. I'm in Dorking right now, and for 350 grand, you can get a decent flat. Or if you're lucky, you could just about find a house. So that's a lot of money that you can borrow. That's first-time buyers. Now, what they're also saying is all you need is a deposit of £5,000. Now, they've got some strange conditions on this, which we need to talk about. That £5,000 can't be from bank of mum and dad. And so a lot of first-time buyers, they get their mortgage from mum and dad. Mum and dad help them with the deposit for a lot of people because it's really expensive to buy right now. So what they do is mum and dad release some equity from the property and help them get onto the property ladder. For some reason, you've got to get all of this money yourself. So you've got to save £5,000. So that's achievable. I bought my first flat down the road from here in 1999. I worked in Burger King as a manager back then, and I had to save £3,000 as a deposit, and my salary was around £15,000 back then. So you can do it. I think £5,000 is a realistic deposit that a lot of people could get. Now, that means your deposit is around 1.5%, meaning they will lend you 98.5% loan to value. That's crazy high. That's not 100%, obviously, but it's very, very close to that. So what's the catch? Is it difficult to get this? Well, that's first thing is you have to fund that deposit. So you have to show that you can save money. That makes sense. Shows that you're good with money. I like it. Next, how long is this deal? Well, it's a 5-year deal. 5-year fixed rate deal, and the rate is going to be higher. It's 5.25%. Now, why is it that high? Because you can get rates at 3.99%. because you've only got 1.5% of the risk. They've got 98% of the risk. So of course, they're going to want more money in order to do that. So the rate is slightly higher. But here's how they're going to bring down your monthly payments, because they've got a way to do that. So most mortgages you get are on 25 years. This one, they'll stretch it out for 35 years. So the term is 35 years. Now, after 5, you can leave, right? So after 5 years, you can leave and you can go to another lender. You're not tied in after that. But if you wanted to stay with them, the mortgage term is 35 years. So the 350 grand, if you kept paying, it will take you 35 years to pay off. Now, you can pay more. You could overpay by 10% a year. That's fine. Any lender will let you do that. So that's one option. But you also could go to your next lender and just go back onto a normal 25-year mortgage at that term. So that's an option too. Now, they also have other loans here, and they have other rates even. So if you went with a 5-year deal and you've got a deposit of 20%, you can get a rate with them of 4.66. That's not bad. So it's not the best deal in the market, but first time buyer rates are definitely always a little bit more expensive because there's more risk. They don't know that you can manage your money and how you're going to cope with the property. Are you going to stay together if you're in a couple? There's a lot of factors at play here that they've got to consider when lending out huge sums of money. Now, I said, would I get this kind of deal, or would I let my daughters? I've got Georgia, who's 4. So, no, that's wrong. Georgia, who's 24, who's going to start looking soon for a property to live in herself. She still lives with myself and my partner. And we've got Amelie, who is 4. Obviously, Amelie's not going to get one. But would I let them do it? Yeah. I would let them do this. If this got them onto the property ladder and they said, look, Dad, we can rent this house over here, or we can get this deal over here, what would I pick? I would pick this deal all the time. Now, would I prefer them to get a bigger deposit in that deal, bring that interest rate down, build more equity in that? Yes, 100%. But if I had a choice of this deal over here or paying rent over here, I'm taking this deal, because even though this is spread over 35 years, so your monthly payment's only going to chip away a tiny little amount against your balance, over 5 years that you've got on the term here, I do think house prices could drop now a little bit over the next few years, but I do think in 5 years they'll be higher than they are today. And so you're going to build some equity by doing that, by being in the market for 5 years. You'll build some equity, and even if the market stayed flat for 5 years, you'll have paid down some of your balance. Now, because it's 35 years, mortgages have a lot of interest front loaded. It's not going to be loads, but it's some of your balance is going to be reduced by paying a monthly payment for 5 years, and you own the property at the end of it. So that's a smart investment in my eyes, and that's what I would do, and that's what I would allow my children to do. But if there was a better deal, if they had a deal over here with Halifax that was a 3.99 deal with a 10% deposit, I'd take that one. But if this was my only option, because I didn't have a big deposit, I would go with this one, if that makes sense. I would definitely go with this one. Let me know what you think you would do, or would you allow your kids to do in the comments below. And last thing before you go, there's a few days left. Tomorrow it runs out. We've reduced the price of the fundamentals of property investing just to £20 at the moment. This allows you to find properties below market value. It allows you to learn how to add value to the property. I'll show you how I've done it. How you add bedrooms, how you do a light refurb to add value to properties, how to find these properties that are below market value. And then after all of that, should you buy to let it? Maybe not. It's tough to be a buy to let landlord now because the tax is high, you've got the renters' rights bill, all this other stuff. So we look at high cash flow strategies, serviced accommodation, HMOs, all of this stuff. Everyone else is selling this for thousands. We're selling it for £20 once, a one-time payment. It gives you all the fundamentals of property investing for 20 quid once. Do click in the description and the first comment and go and check that out and grab a copy before the price goes up at midnight on Sunday. Do also check out all the other content as well on the channel, including this video right here.